Good morning and welcome to this Lightcast live analysis of the employment situation, also known as the Monthly Jobs Report, a Bureau of Labor Statistics monthly report that gives us some indication into the health of our economy. On this March 10th, 2023, I'm your host, Christopher Laney, and I am joined by two fantastic economists, Senior Labor Economist Ron Hetrick and Senior Labor Economist Elizabeth Crowfoot. Elizabeth, Ron, welcome.
Hello, Chris.
Hi, good morning.
It is good to be here with you guys. I'm excited to get into this report. It seems like there was a lot of good news, and I'm excited to hear what you guys have to say. So, Ron, I'm going to start with you. Give me your first take on today's report.
Yeah, you think about this month is actually a month that the seasonal expectations. So, certain times of the year we lay off people, certain times we hire people. The seasonal expectations in February are that we're going to be hiring people to the tune of 700,000. And we actually beat those expectations pretty solidly. So if you go back to January, a lot of our gains were because we just simply didn't lay off people like we normally do. But this month, there's a lot of actual real solid gains that occurred. And, we're going to go into with the industries, but you're seeing them. We're starting to see it in places that we were really hoping we'd start to see people get added. And I think there's a lot of good in this report. Even that little tick up in the unemployment rate will probably ease the mind of the Fed a little bit.
Elizabeth, there are a lot of eyes on this specific report as the Fed is looking to raise interest rates once again. What is your first take on this report, and is this what they were hoping or expecting?
Yeah, I think that coming into today, everyone was thinking, is this going to be a continuation of the previous trend that we saw at the end of last year of moderately declining job gains, or is it going to, coming off the heels of January's blockbuster numbers, is it going to represent a taking off of the labor market? And we're kind of right in the middle. Right. So there is some evidence that last month was, a statistical aberration, weather related events. So, there's always those one-off instances. But, 311,000 job gains compared to the previous trend that we were seeing that was, solidly in the 200s, heading towards lower than 250. So this is definitely a little bit of a reversal in that previous trend. So it is worrying for the Fed. I think that might, start to make people think about, whether they're going to do a 25 or 50 basis point increase. I think anything is on the table at this point. It's really going to depend on, upcoming data with the inflation numbers next week as well. But it's definitely not the direction that the Fed was hoping for.
Ron, when we've talked a lot about demographic shifts in the labor force, was there anything that popped at you in this report just regarding who's returning back to the labor force?
Yeah, one of the things that I think we are now clearly seeing, this is something that we have been noticing a lot, but I think you are starting to see probably the effects of immigration here. So if you look at our labor force gain, around 420,000, around 70% of that gain was with Hispanics. So we do believe that, we have noticed that both the numbers of legal and undocumented workers have been coming up quite a bit. And I think you are seeing that here. And I think you can also kind of look at the industries that are adding jobs. And I think you might be seeing traces of this all throughout this report. You just have to kind of look in different spots. But I think, ultimately this is encouraging because the types of jobs that these people would fill are the ones that we've been so desperately trying to fill, in particular over the past, 6 months to a year.
So this question is for both of you. I'm going to start with you, Elizabeth. Looking at the breakdown by industry, were there any standouts for you, any industries, whether it was gains or losses, that really popped out?
Yeah, I think the industry makeup here of jobs really underscores the fact that we have a really bifurcated labor market, right? It's really increasingly hard to talk about just one labor market when there are many different experiences. For example, we did see declines in information and transportation and warehousing, for example. And that's just the continuing narrative, of layoffs. And we're starting to see that a little bit in the information sector. Transportation and warehousing, people are shifting from, goods consumption to services consumption. So we're seeing that a little bit there as well. And also slight decline in manufacturing, for the most part steady, but, that is something to keep watching. We did see gains in in-person services sectors, right? So restaurants, hospitality, leisure and hospitality in general, really holding up strongly. Again, that shift from goods to services. Also, education and healthcare. Those are industries that see strong demand regardless of what's going on around the macro economy more widely. So there's definitely a lot of different experiences in this labor market.
Ron, how about you? Anything that you're seeing based on the industries in this report?
Yeah, actually, there's several things. And, Elizabeth just alluded to it. We've been waiting for this kind of cooling off that was supposed to occur in durable goods manufacturing, and it just kept waiting and waiting. And we do know that, durable goods orders, when you exclude aircraft, actually just had another pretty decent month. But you are starting to see that sector just cool down a little bit. And then you can kind of follow the supply chain, right? So you go from manufacturers, then you go to warehousing, which peaked a number of months ago, and it's been slowly ticking down, not in leaps and bounds. In fact, if you look at it historically, it's still in kind of this insane high territory. Truck transportation has definitely been on a downward trend over the past couple months. But you see these things kind of making it to the end. So when you see things like general merchandise stores, they're hiring right now. And, so people moving product are still in demand. And then what was also alluded to is, one of the things that everybody's looking for when they're saying, will a recession happen? Will it not happen? Is you're looking at consumer spending. And we've been saying that as long as consumer spending occurs, then it's really hard to imagine that you could have recessionary conditions. So you need this decline in GDP, but that's accompanied by like a spike in the unemployment rate. Well, if people are just shifting what they buy from one sector to another, you really don't see this drop off. You just see people kind of changing their behaviors. But this is really fascinating. I think it's something a lot of people haven't thought about. But restaurants have had 26 consecutive months of employment gains. Hotels have had 25 consecutive months of employment gains. I know even in the town that I live in, there are still nothing but help wanted signs out there. But the job openings in leisure and hospitality did come down last month. Not a lot, but they did come down. And so, these kind of things where you kind of follow the dollars, right? And I think it tells you a lot about the economy.
Yeah, I also
Chris, if I can just jump in, construction as well was really strong. It's holding up. These are sectors that are really interest rate sensitive as well. And real estate also with some slight gain. So that was surprising as well in terms of, these are sectors that we expect to, fall off a cliff here, especially with what's going on with the interest rate hikes. And we're just not seeing that.
Great point.
For both of you, again, another question for both of you, talking about just some of those gains and what is happening in these industries. Can we break down a little bit of what we're seeing in wages? So not just overall, what are we seeing in wages, but also anything that we're seeing in wages regarding to the specific industries as well. And Elizabeth, I'll start with you.
Yeah, I mean, this month we actually saw an increase in wage gains when we look at it from an annual basis, right? We went from 4.4% annual wage growth to 4.6%. Again, not exactly what the Fed wants to see. And that's really not consistent with that 2% inflation target. And when, what I mentioned before about this bifurcation of the labor market, that's also in terms of wages and in terms of the occupation. So workers and in-person services are still seeing elevated wage gains. They are coming down a little bit, but they're still significantly higher than other parts of the economy, other types of workers, especially in professional and business services, for example. So there is that difference there. And again, that's not what the Fed necessarily wants to see in terms of continued elevated wage gains, when really what we want to see is more of a closer to 3.5% wage gains. That's, 2% inflation and about 1.5% productivity growth. So, the math just isn't adding up right now.
Ron, how about you? Anything that you're seeing regarding wages or anything that you want to expand upon?
Yeah, I think that we're seeing, that intense pressure, when you start to see openings just came down ever so slightly. I think we are seeing a little bit less of a frantic need to fill orders and everything. So I think that that's helping things. But, something very curious about this, what the Fed looks at here, especially when you're looking at wages, is kind of this mix shift effect. So sometimes wages on an overall level will go up because you add a lot more like higher paying jobs and you lose lower paying jobs. But if you look at this report, we added a tremendous amount of jobs that are typically paid under $20, $25 an hour. Over a third of our job gains were in retail, restaurants, and hotels, going back to that point again. So you're adding what we consider to be lower wage jobs, but yet we're still getting an increase at the top side. And I think this just shows the strength of two things. Number one, we've always said wages are sticky. They're not going to come down once they get up there. And then it just shows us that incumbent workers, are probably still maybe falling behind the people who keep switching jobs. And as people are taking jobs, they're still being offered these really good wages, and it kind of pushes this number up.
So for our final takeaways for both of you, also share not only your final takeaways, but are you feeling optimistic about everything you're seeing as we're moving into essentially into the second quarter of this year? So Elizabeth, I'll start with you. Final takeaways, and are you optimistic?
Yeah, my final takeaway is that, we're definitely not reverting back to the trend that we were seeing before, not moving in the right direction in terms of overall employment gains, wage gains. It's concerning going into the March meetings, and, the Fed is going to have to make some difficult decisions there. I am very optimistic. I think that this labor market has been so resilient for the past several years. And to be honest, I think there are so many structural effects, so many structural changes in the way that we work, in our demographics, in the pay structures that we're seeing across occupations, that is really difficult to compare the labor market today to the labor market before the pandemic. And I know that's sort of the natural thing to do, but we've really moved beyond that. This is a different labor market, and that's what we're going to see going forward. It's much more resilient. There's a lot of demand, consumer demand, and also employer demand for workers because of the demographic shifts. And I think those trends, there's a lot of momentum, and that's going to carry us through at least through the middle part of this year.
Ron, same question to you. Oftentimes you talk about the fact that we're not going to go back to those previous cycles. We're always going to kind of have a shortage of people, right?
Correct.
And so, looking forward, is it the fact that, elevated job openings and people are going to continuously have opportunities to work?
Correct. Yeah. I mean, it's hard not to be bullish. You got temporary help, which went down a little bit towards the end of last year, and it's already starting to go back up again. We are dealing with uncertainty, and we keep bringing up this fact that a lot of this uncertainty are because people are used to Fed actions having certain results in the past, but this isn't the past. We've never walked into a situation like this with such a significant labor shortage. So I think no matter what is being done on that interest rate side, it's just not going to have the effects that it had. And I think, you are seeing things like manufacturing orders, like I was saying, kind of ticked up again last month when we take the aircraft segment out. We're looking at that core thing. And we're also looking at people have jobs. And when you look at it, there are fewer unemployed people now than there were February of last year, despite the fact that we've added 2.5 million people to our labor force. So I know that, we talk about things in unemployment rates, and you kind of lose sight of the fact that despite all of these additional people we still have fewer people unemployed. There is still a huge amount of opportunity. There are still a lot of companies that are still trying to fill jobs. There's still a lot of help wanted signs. So when you look at this and you kind of go into this year and people keep saying, well, we're going to have this recession, they're increasingly finding it harder and harder to find any facts or data to back up those predictions, because the data that I see looks pretty favorable. And I think certainly when it comes to things like, that historical spike in unemployment, it's just really difficult to imagine that could ever happen. I don't even know if it can happen again.
Ron, Elizabeth, this was a great conversation. So thank you so much for your expertise. If you want more information about this report or any additional data, visit lightcast.io. Thank you so much for joining us, and we'll see you again next month.
Thank you.